Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 31st of August. All right, no update yesterday. I had a few technical issues. Now, just having a look where we came from the Fed last Friday. Now, the market wasn't extremely chuffed with the timing for the tapering. It wasn't really sort of suggestive. It just, they basically stuck to their mantra, right? So just looking at the dollar index, it's dipped lower. It should be easier for me to show you the main charts of all the majors. Now, so you get that sort of little drift lower in the dollar, right? Back down towards support there at 92.60. We saw a flush out of short euro positions just above 117, sort of 60, 70. Sterling, well, it came back, but it's back towards that resistance level. You can see how that's holding nicely. Aussie's come back to its key resistance levels, as has the Kiwi. Now, the fact is the Fed didn't change anything. The plan's the same. And the plan is if employment continues to improve, well, then they'll have to start tapering their asset purchases. So what we've seen is it's like a rejigging of the positions in the market. Now, when it comes down to looking at these key levels, see how they've all sort of pretty much come down to support or resistance. Okay, Euro's sort of blasted through its, but the rest of them are all sort of sitting in the balance. No one is willing to really sell dollars or buy dollars at this point because they're just uncertain what the next step is. Well, we know the Fed has said they're going to start tapering by the end of the year, but is that going to be September or October, November? So what it does is it really magnifies this week's non-farm payrolls, right? That's the data that will basically push the Fed towards the tapering situation or not. Right now, dollar Swiss and dollar yen sort of trading sideways. Some nice loopy movements there on dollar Swiss. Good to see it starting to move. But when we are sort of looking at what's going on now, I just missed the update here on Metastock. They've just refreshed for the new day. Now, Treasuries price rally, which means the yields are a little bit lower, right? That takes off the interest rate pressure off the market, and that's why the equity markets have rallied. All right, so they're just having a bit of a breather. I think the equity markets will still be somewhat nervous as we head towards Friday's non-farm payroll. So what do we expect to see in the major currency pairs? Pretty much sideways trading for the moment. It's almost like traders will wait and bide their time until we get to Friday's non-farm payrolls, because that's the key data. After non-farm payrolls, it's the inflation numbers another week or so later. Right, they're the two key numbers. Outside of that, if we get direction from those numbers, we get a dollar move. If we don't, we just trade sideways, and then it comes back to the individual data for each other country to see if anything's coming out. Now, we do have a few things coming out today. The NBNZ Business Outlook, right? This is a low tier number for the Kiwi, but I'll tell you what, it has the potential to move the market because it is you get some wild moves in the numbers. So make sure you have a look at that. If you're in the Australasian session, then you've got some building approvals, current account balance. It's no big deal. Like that's. I know a lot of people get excited about the current account balance. It's no big deal. The private sector credit building approvals. Well, you know what? There's a big lockdown going on in Australia. I can't see any positive news changing the overall sentiment. I know we saw a US dollar sell off and pushed the Aussie up last week back to 73. I still can't see that being maintained. Now, as we come into the European session, you've got, German unemployment. Germany is the key to the Eurozone. So I'd be keeping a close eye on that. We may get some sort of lead into Euro. In saying that, Euro's in the middle of nowhere at the moment. So it's a little bit of a tricky one. And then you've got, some flash inflation numbers there as well. We've got Canadian GDP numbers. Now, you're really just looking for, if you can find what the forecast is, have a look at how the number comes out. Dollar CAD is in the balance, right? So this is the good part. When you're looking at these numbers, you're going to find the pair. Then you come back over here and you find dollar CAD and you think, well, you know what? This thing is right on the edge. Really strong GDP numbers would give it probably enough push, or definitely to get down towards 125.60. Will it have enough to go through that level? Well, it depends on the level of variance of the data. right? Really weak GDP numbers, Canadian GDP numbers, you probably see it back towards 127, right? So there's potential in dollar CAD. If you're in that North American session, I'd be keeping a close eye on the Canadian GDP numbers because that's a bit of a lead in for us. And then you come back over here. I mean, there's a fair bit of stuff. Don't forget, we're getting closer. Well, tomorrow's the start of the new month, but we are getting the remnants of US numbers. You've got consumer confidence and the Case-Shiller numbers. I mean, historically, these are pretty good numbers. So keep an eye on those. And that's pretty much it. So we've got a little bit of a second, third tier release of data today, which could give us a couple of opportunities on a few pairs. But don't think for any second that these are going to be outrageously long term, right? The non-farm payrolls is the key come Friday. So these opportunities may give us some sort of inspiration or momentum. You got to look at the currency pair specific for the release. Does it have momentum? Do we have key levels? I don't think any of them are going to be strong enough to really give us a move that's going to last more than, half an hour, right? If anything. So it's one of those things at the start of the week, prepare yourself for, what's ahead. And you can be looking through, like coming into Tuesday in Asia, right? The market is just starting to settle down after the weekend. And then you can come back through and start to have a look through, scroll down through your calendar and start to work out where the key releases are. You can see there's a bunch of German data there. I love the German numbers, very consistent economy. So if anything changes in Germany, it's very reflective of what happens in the Eurozone. UK house prices. Then we start to get into some of the PMI numbers out of Canada, US, construction spending, all the little backbone pieces of the data. I wouldn't be looking at the Swiss GDP or CPI. That's pretty much a neutral number. Then we get closer to Thursday, the initial jobless claims in the US. These trade balance in the Canada, no big deal. Factory orders, and then you come back down. We get to the non-farm payrolls Friday. This is where the action will be. So this week, we're either piecing together, right, what economic data fits the picture. Now, I've been saying this a lot. When you start to look at these pairs, the ones that are active to me are the Canadian dollar, right? The Bank of Canada has given us clear guidance on what they're going to do. The RBNZ, they have told us they're going to raise interest rates if the lockdown in New Zealand ceases, basically. So keep an eye on that. And then you've got really the US dollar, which brings all these other pairs into play, but it's only one side of the equation. The CAD, the Kiwi, obviously the US dollar, they are active because the data means something towards what they've told us in the past. These other pairs, it really comes down to the US dollar for the decent move. What can happen is if we start to look for, the individual data like the German numbers, we may see a bit of movement here on the euro, maybe on the sterling, Aussie, but we're not going to get that big move because the data, it's strong or weak, it's great, but it doesn't match up to anything that the central bank is telling us. And that's why traders will lose interest. Whereas Kiwi, CAD, obviously the dollar will be very active because they've got a plan, right? They've given us a plan, traders a plan to stick to, and that's what brings these currency pairs into play. So focus on what's in front of you. Now, just having a look at the, if you're looking for a bit of a risk on, risk off situation, I don't know if we're really getting that at the moment. After yesterday's trading, looking at the North American session, equity markets up a bit. The other currencies were just sort of sideways, slightly down. Keep an eye on the US equity futures for the Asian European session. This will give us a lead into where the US equities will open up, right? I think the move is already done, right? We sort of sell off on the US equities last week as, the whole tapering thing was getting hyped up. The yields on the Treasury bonds, US Treasury bonds was going up. Now that's sort of stalled and reversed. I think the market has flushed out the moves. I reckon the equities will trade sideways from here, as will the treasuries, and that'll send the major currency pairs into a bit of a neutral phase until we get some significant US numbers. Obviously, the non-farm payrolls Friday is the key. And outside of that, guys, there's not much more you can do. You know, you can flick through the pages and have a look around, see what sort of what the market's focusing on as far as news. You'll find a lot of it is pretty trashy sort of stuff. You know, fillers. They got to find stuff to fill the gaps here. So just have a read through and see if you can isolate what's going on and where the pulse of the market is, and that'll put you in good stead to make a trading decision. All right, guys, have a good trade day. All the best. Cheerio.